This is your Monex Metals Market Update with Mike Maroney.
Good afternoon. It's Wednesday, January 3rd, 2018. Happy New Year, everyone out there. And we believe 2018 is going to be a very good year as far as the precious metals markets are concerned. Let's talk a little bit about how we ended the year, and let's talk a little bit about how the year has begun. If you look back to November, gold and silver were heavily hit to the downside as gold pulled all the way back down to $12.38 from a high of $13.56, so approximately $120 drop. And silver pulled back from a high of $17.82 all the way down to $15.58. So there are a lot of nervous Nellies out there that were holding on to precious metals, wondering if they were about to fall into the proverbial abyss. But lo and behold, what we saw come out of the woodwork was strong commercial buying. And what is commercial buying? It's very interesting. If you mine metal and the price is high, what you do sometimes is you sell it forward, which means you lock in a higher price to deliver at a later date. But then when the price drops down to close to what we call equilibrium, which is the cost to produce, instead of mining the metal, what you do is you go out into the open market and buy the metal with a differential of $2, $3 an ounce in silver, maybe $50, $75, $100 an ounce in gold. And without doing anything, you fulfill your forwards by pulling metal out of the market. And what this does is it creates a very strong base. And the interesting thing is, as the market was dropping, the speculators were suddenly becoming bearish as the large specs, which are typically 3-to-1 long to short in the gold and silver market, suddenly became aggressive short side sellers and have now developed a position that is almost balanced. Now, when you think about a spec that's short, you have to remember that speculator does not have long metal, at least most of the times. They do not have physical metal to deliver against those short positions. And because of the unlimited risk nature of a short with a speculator, those trades have a tendency to cause emotional reactions sometimes. And what do I mean by that? I mean, when the market was at 1580, they're thinking silver could be headed to 12. And suddenly it reverses and it goes up to 1650, and they're thinking, I'm not worried. It's only rallied 60 or 70 cents. It's just a little correction. But then it keeps going and it keeps going. And suddenly you're on a key resistance point right at 1727. Which could take you to 1745. And if you break above 1745, this market could start to thrive. Now the speculators are starting to worry. Now they're wondering if they need to get out of those shorts and potentially make back some of that money by getting long. And that's why we're getting a lot of action in the markets, because it's happening in both silver and gold. People are fearful that inflation will be back. We've printed massive amounts of money, but we have not seen the velocity of money pick up. When interest rates increase, the velocity of money increases. And if you have a massive increase in money supply with an increase of velocity, you start to get inflation. The ultimate catalyst as far as precious metals are concerned. We have inflation, we have uncertainty, we have geopolitical issues, we have great supply-demand picture developing, and we have prices moving up quickly. We have the recipe for a short sweep. And quite frankly, it's still undervalued. Silver 1727 is $35 off its highs. Gold at 1308 is still $600 off its highs. Now may be the best time to own precious metals, so give us a call here at Monex so we can talk to you about how gold, silver, platinum, and palladium can fit into your portfolio. Thank you.